Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Inflation is rising more quickly in one large economy, the US, and policymakers there and financial markets are getting skittish. Firstly, this week will be dominated by the Reserve Bank of Australia's release of the minutes of its November the 5th meeting. There will be intense interest on their views of inflation risks. Then the US Fed will release the minutes of its October 30th meeting, and observers will be looking for similar clues. Locally, we'll get another full dairy auction and trade data this week, preceded this morning by the REINZ October results at 9 o'clock. Trade, inflation and PMI data will be coming from a range of countries. From the US, we await how they will be catching up with their official data releases. There will be the usual prosaic private sector data releases, but the new weekly ADP employment data will bring intense interest, as well as some earnings reports, especially from Nvidia. There will be little major data this week coming from China because they released most of it this past weekend. And that was headlined by a big unexpected negative surprise from their fixed asset investment data. They said it fell 1.7% for the year to October, but that belies a huge 11% drop for the month from the same month a year ago. For a country as large as China, that is a mammoth and sudden shift. The really large decrease was in the industrial northeast region, and that is puzzling analysts, especially in the light of the electricity data surge they had there. Perhaps a clue is in this factoid from their data release. Quote, fixed asset investment by foreign invested enterprises decreased by 12.1%, unquote. The slump raises important questions about the health of their domestic demand, which is still over-reliant on exporting. The internal economy still hasn't gotten over the real estate slump and the resulting defensive change in attitudes by their consumers. And China's new home prices in October across their 70 major cities were unchanged from September, officially, but dropped 2.2% from the same month a year ago. This was the same year-on-year decline they had in September. Most analysts expected a lesser decline of 2%. 7 of the 70 cities posted modest year-on-year price gains. None of them posted any gains for resales. Meanwhile, China's retail sales held up better than expected, up 2.9% from a year ago with better holiday spending. Their official industrial production was up 4.9% from a year ago in October, a rather large easing in their 6% September growth rate. And China's electricity production fell in October, but that was less than expected and less than the usual seasonal pattern, so it was up an unusually large 7.9% from a year ago. That may have something to do with the electricity appetite by AI infrastructure. In India, bank loan growth stayed very high in October to easily a new record, even if the percentage rise wasn't as high as September. That is now 3 consecutive months where new debt has risen by more than 11% from the same month a year ago. In Canada, they released some September data over the weekend and it was quite positive. Their manufacturing sales rose 2.7% real, and their wholesale trade rose 0.6% real, both from August. Year on year, it isn't so positive, although manufacturing sales are almost back to those year-ago levels after being down 4.1% in May. Both data sets indicate remarkable resilience and their fast transition, even after being dumped on capriciously by the US. And there was some interesting data out over the weekend from the EU, where their trade surplus rose to €19 billion in September. That was its best in 5 months and 50% better than year-ago results. Driving the gains were exports to the US and the UK, offset somewhat by imports from India and Mexico. Imports from the US rose too, but at a slower pace than the export activity. Imports from South Korea fell sharply. Trade activity with China was little changed, although it remains deeply negative. That is, more imports from China than exports to China. In the US, there are clear signs investors are getting quite skittish about the risk of bonds tied to AI companies. Don't forget, bonds have priority over equities, so the dive for insurance on bonds isn't a great sign. Bloomberg is reporting the demand for credit default swaps is surging for these bonds, and they cite what is happening in Oracle's case. A surge in debt is expected to flood debt markets soon as these AI companies ramp up funding of their plans. And there is the news that Trump is now rolling back some of his tariff taxes because even he can see they have caused household inflation and the affordability crisis he is being blamed for. US inflation pressure is moving the dial in money markets. The chance of a Fed rate cut on December the 11th New Zealand time is fading, and quite quickly, as professional traders scale back the bets on a cut rather sharply. The US Treasury 10-year yield is now at 4.15%, up another 1 basis point from Saturday and up 7 basis points for the week. And the price of gold will start today at $4,081 an ounce. That's down $17 from this time Saturday, but that is up $17 for the week. American oil prices have held from Saturday to be just over $60 a barrel, while the international Brent price is now just under $64.50 a barrel, up less than $1 from a week ago. And the Kiwi dollar is now just on 56.8 US cents, unchanged from Saturday, up 60 basis points from a week ago. Against the Aussie, we're up 10 basis points at 86.9 Australian cents. Against the euro, we're unchanged at 48.9 euro cents. That all means our trade-weighted index starts today at just over 61.3, little change from Saturday, but up 60 basis points for the week. And the Bitcoin price starts today at $94,374 and down another 1.5% from Saturday. That is its lowest since May 2025 and down 8.9% for the week. Volatility over the past 24 hours has been moderate at just on plus at minus 2.7%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.